Hello, everyone. Welcome to Live Trading Thursday. I'm excited to be with you today because we got some really good stuff going on in the market right now. There are opportunities out there, both to the bullish side and the bearish side. I can't wait to get to that with you. Please do send in your tickers. Love to look at the trades that you want to look at. Any trades that you might be in, even we can look at those as well. Love to analyze those with you. If it's slow, I've got a few tickers I can throw out there, but really in the past, this has been, much better when we have a lot of participation and you guys are throwing in tickers as well. So I should mention that all these examples in this live trading session, they should be viewed for educational purposes only and not taken as trading or investment advice. All right, let's go ahead. I'm going to share my screen and we're just going to do a quick overview of the market. So like I mentioned before, this bear market is not over. We had this big statement candle right here and it just went down, down, down. Kind of made it hard because you really need a pullback to the upside, that is, so you can get a good buy point if you're looking for a bearish trade. And guess what we got? We got a little bit of a pullback. This one, that was a real quick one. It didn't even make it up to the 10 EMA, then it came down again. Nice up day yesterday. Today as well came up to the 10-day and then moved down. Guys, that might be our pullback. I mean, it's a little too early to say for sure that this thing is going to just turn over, but that's a pretty nice, move down from the 10 EMA. There could very well be opportunities right now for bearish setups. Because if that keeps moving down and we end up on a down day, that's a big wick on top. You could see this market pushing down more and, maybe looking for something around the 3750 range in the next week or two. That is definitely a possibility, not outside of a realistic forecast, you could say. And I'm not really saying that is what's going to happen, but I'm saying the chances are pretty decent if we do end up today with a pretty bearish candle. So with all that being said, if you were to take a trade like that, you'd be looking at a shorter term trade, right? We're not going to be looking to be in a bearish trade for very long. Those moves, they happen quick. You want to get that profit and then get out. You also want to have quick, tight stop outs. If you were, let's say we were trading this, S&P 500 index right here. Let's just pretend this was a stock, right? And we're going to trade this thing to the downside. Where's the stop out going to be? Well, I'm probably looking at something like right about there, just above that candle. It's going to be pretty tight. So we don't want to give it too much room to go against you. They're going to be pretty quick trades. All right, guys, let me go ahead. I got to look at comments here. Perfect. All right, Benjamin, thanks for being on. Glad that you're with us. If you got any tickers, any trades you want to look at, go ahead and throw those in there. I'm going to get us started with just a couple that we can look at as potentials here. And let's look at Netflix to get started here. Netflix, kind of interesting one, right? Let me zoom in on this guy. There we go. This pattern's not really the cleanest, but you can see it's been getting bogged down. So it hit this resistance area and then it started to move down. Now it's kind of stuck between EMAs. I mentioned this one because what if this guy were to break out to the downside, right? If this thing were to break down and close below the 50, there's the potential that it could start dropping pretty quickly again down to, this closer to this support area. I got to zoom out again, right down in this area. So, if you had a move from 224 to 175 or so and you were bearish on that, that's a huge move. So that's a good one to kind of keep an eye on. All right, Benjamin, MMLP. Let's take a look at that one. MMLP, Martin Midstream Partners. Okay, all right. All right, so this one is kind of an interesting one. You can see, let me zoom out a little bit here, actually. This is almost right at its at a support level. I'm going to drop a line right about there. That's probably pretty close. You can see how that was support back in here, was support again, And now you've got that wick moving up. So it just kind of just kissed that line and moved up there. So this is one. Here's the thing, right? Getting bullish on this guy, I have a hard time with it. And this is why, right? We've got highs, lower highs, lower highs, lower highs, lower highs, lower highs. You see that? You're not going to be able to get a beautiful line on that right there, but well, we might be able to do it off of these guys. This is the nice thing about doing a live like this, right? I mean, you don't have all this pre-planned speech here. So what does that kind of look like? If we look at that right there, we're kind of looking at oh my goodness, it's escaping me. A bearish wedge. Essentially, it's a wedge to the downside. And so I wouldn't want to get bullish on this, right? Just because we have all these lower highs, and this is consistently lower highs. That support could hold, but we were just talking about bearish setups. What if this thing were to break support, right? What if it were to break support? You could be looking at this to the downside. Now that I say that too, look at the price though. I don't know if there's going to be many options in here that are going to work for that. Let's say it breaks down and at $3.40, you're like, I'm going to get bearish because I think it can come down and play in this area right here, maybe 310 or something like that. Do we even have good options? See the liquidity? Liquidity on the options isn't very good. So even though the chart might be telling you, hey, it might want to move down, you're going to have a hard time trading this guy to the downside because there's not much in the way of options. So I'm glad you brought this one up, Benjamin, because there's a lot of learning opportunities in here. But if you're wanting to get bullish, there's some other options we can look at. Benjamin's saying waiting for a smaller up. Yeah, I mean, I'm not saying it's wrong. Like, I'm not saying you couldn't get in there and then trade to the upside, but you're going to have to fight through these EMAs. You don't have a whole lot of room to the upside before it hits the downtrending resistance line. It's just not as good of a setup as what we could be looking at. Let me go ahead and pop one in here. If you are looking at a bullish setup, I would still take a look at the energy stocks, right? Energy has been one that's been moving up. There's even some news out there saying that energy could be getting more expensive or moving up because of what's happening with the war, Russia and Ukraine. So let's take a look at a couple here. Let's start with Suncor Energy, right? Okay, Suncor Energy. Let me grab a line. If you want to look at this one, there is a shallow uptrend that's kind of forming here. You've got this low, high, higher low, higher high. And if that does turn and bounce, and I'm not saying I'm convinced on this, right? I would want to see something really move up a little better of a clear candlestick there. But if that really does bounce, then you kind of have a higher low, right? And there could be opportunities there as well. And so now you have a trend where, maybe if you get in at 31.50 and potentially you could get out around 30, 34.50, 35, depending on how conservative or aggressive you want to be. So, that's a solid, 10% plus move, even just a stock trade, guys. When you can get 10% just on a stock trade, that's pretty solid. It's pretty solid. And you could put a real tight stop right there, stop it out at, just below $30 a share. Let's take another. Feel free to keep them coming, guys, if you want to throw any others in there. Otherwise, I'll just keep rolling with a couple examples here. Devon Energy. Okay, this one not as good of a trend forming. It is steeper, so that's kind of nice. The question is that a bounce, right? That candle is kind of ugly where it's just, all over that 20 EMA. Didn't really bounce off the 20 EMA. Maybe it was using the 34. But if that shows that it wants to pop up above the EMAs, that could be an entry point as it might be moving up. MRO, same kind of idea here. Let me take this line. Actually, let's put it there. I'm going to adjust this line. That might be a better line right there. I've got one touch, a second touch, maybe that's a third touch, and a move up. So if you're looking to the bullish side, MRO is looking pretty good right now. Again, you got to ask yourself, where's your stop out going to be? If it were me, I'm probably going to give it, this is a bit bigger of a stop out, I would say, but I'm probably at it right around 24 and a quarter. So that's not an awful stop out. You know, that's $1.50 or so on there. It's still less than 10%. But, you know, these energy stocks, they have their opportunity to do some pretty big moves. And so this thing could, you know, if it increases the high by a couple dollars again, maybe you're looking at 28.5, 29 as a potential target. So there's some opportunities there to be looking at to the upside. But, you know, I mentioned some things to the downside. We looked at Netflix earlier. Let's take a look at another one that has a possibility. I'm just gonna, oh, actually, let's take a look at Benjamin's next one here, CNQ. See what we got. Okay, so this one, again, it has a little more of an uptrend look to it, right? I mean, it's made some higher highs and higher lows. So I'm not really looking at this guy to the downside. Could it go to the upside? Yeah, it could. And that could be a turnaround. I'm trying to see, where would that line be? Maybe right there. It's not the best defined support area, to be honest. I mean, there comes a point where you can just, you know, maneuver the line and make anything almost look good. So, but what if that's our support, right? And what if we've got resistance up here? What are we looking at? That could be an entry point right there. You know, I would maybe wait later on in the day, and if it wants to close strong, that could be an entry point to consider. And if you got in just below, say, $54 a share, you know, $58 a share is a target, that's pretty decent. Keep in mind this 100 simple is moving downward though, and it did show to be resistance right in here. So if I were going to take this trade, I would probably want to do a more conservative profit target. Call it maybe 56.5. And then for my stop out, I'd be looking at, you know, something just below this this turn right here. So just below 52, maybe like 51.75, something like that. So that would be something to consider. Then you just got to run the math on that. See, is that you know, reward to risk ratio acceptable to you? And it doesn't matter what I say. If that reward to risk ratio is not acceptable to you, you don't take the trade, right? You don't take the trade. Generally, a lot of people with a simple stock trade like this are looking at, they want at least a 2-to-1. You know, if they can make at least $2 for every dollar they're risking, essentially, then that is an acceptable risk. And so that could be a good rule of thumb to start off with. Some people it's more, some people it's 3-to-1. So it just depends on kind of what is your trading personality, what is your risk tolerance, and all the above. All right, let's take a quick look at Nike. I put that one on my list. Okay, so this was looking a little more to the bearish side earlier. That candle, I wouldn't want to get bearish on that candle, right? But what if that candle fails? Right, the overall market, let's take a look. Oh, yeah, it started moving up again. Okay, so earlier today, you know, we had this massive wick, and it was kind of sitting on a doji right there. I believe they call that a gravestone doji. It's moved up since then, right? It's moved up a little bit since then. But if that were to come down again, then if Nike were to do the same, you see how that chart looks very similar to the market right there? That's nice. So if they were to come down there, that could be an entry to the downside as well. So Nike could be one to keep an eye on also. All right, Benjamin, you're just racking it up today. I like it. We're going to look at GUSH. I think Benjamin's the only brave one on today. I can see how many are on. There's like 10 or 11 of you guys looking live, watching live, but Benjamin's got them all coming. Sweet. All right, so this is a nice looking one, actually. This is a okay, this looks like a oil and gas ETF, and it's leveraged 2 times. Okay, so there's a couple things to keep in mind with that. So the nice thing about that is you can still get leverage even without options, right? You use a leveraged ETF like this one, and you can get some leveraging. And every time that it moves up, every time that I guess you could say the underlying ETF moves up $1, this one will move up $2. But it's also leveraged to the other side, right? If the ETF moves down $1, this one will move down $2. If you run the math on that, it can really hurt you in just sideways chop, because if the ETF is going sideways, then this leverage ETF will actually go down a little bit. We don't have time to get into all the math of that, but that's just something to keep an eye on. But if you have a nice trend, and lately this thing has been trending, you can look at some bigger returns potentially. I mean, look at this, right? This is just a couple months ago when it finally finished coming down at about 100. Did it get to 100? Yeah, look at that. It touched about $100 a share. And just recently, it was just shy of $200 a share, right? Oil and gas has not gone up 100% in the last couple months, but a leverage ETF could, right? And that's what you have here. And you've got just big picture, high, higher low, higher high. And if that's a turn, that's a higher low. And so that could be at a pretty good buy point. So this could be one to consider as a buy point even right now, right? But what's your stop out? Your stop out is going to be, I would be looking at about 150. I want to get below that wick right there. So that's a decent percentage stop out. But your potential reward, this thing could go up to 190 or potentially beyond. Now, I mentioned all this to the upside, but again, look what happened to the downside right here, right? This thing, because it's leveraged both ways. It made a high here on June 8th at about $257 a share. And then on not even a month later, it was slightly less than a month later, it's down to $100 a share. Again, that's leveraged to the other direction because it got cut in. It was less than half. So that's just I just want to caution you with leverage ETFs. They can be great, but they can also hurt you if you don't know what you're doing with them. So use tight stop outs and always stick to your stop outs. If there's one thing you get out of anything on this session today, always stick to your stop outs. That's super important. All right. Jose, glad that you're on today. Melanie, I see you there as well. Melanie says, my first time here on live trading. Well, welcome. I'm glad that you're here. This is great time. We just look at some trades. We're about to wrap up here actually, but every Thursday, noontime Central Time, we look at trades in the market. It's like the live trading hour, but we do it for about 15-20 minutes. So Jose wants to take a look at Tesla. Let's see what we can find here. All right, Tesla, as you guys know, this one can really take off at times. But, it can also fall down quite a bit. Tesla, just by the volatility of it, honestly, almost acts like a leveraged ETF, right? We just talked about how that leverage works. Tesla kind of does that as well, where it isn't leveraged, but just with how quickly it can move and how much money it could make or lose in a short amount of time, it's almost as if you're trading a leverage ETF. So just keep those same principles in mind, quick stop outs. But all right, let's take a look at this. What do we got going on here? It's kind of not the prettiest chart, honestly. Of course, we all want to see this, right? We all want to be able to get in right here on that day or maybe that day, and then you just see this thing just explode to the upside there. Okay, that's right. Tesla had a split. I forgot. I was like, those prices don't look right. That's way too low, but it had a split. If you want to see the unadjusted split, you can hit that unadjusted button and you can see that's what happened in the split right there. But to make the chart readable, we just click that button right there. Perfect. So it is kind of turning around here, right? Could that be looked at as a tiny W? Maybe. I'd be a little more comfortable with this thing to the bullish side if it was closing above that 20. If it's closing above that 20, you could look at that. But then again, where's your stop out going to be, right? Is it going to be down here? 265? That's a pretty huge stop out. Tesla's going to be one of those. It's hard to catch. It's hard to catch. This one right here, look at this beautiful flag. Bounce up off the 10. But would you have bought it on this day right here? Maybe. That's an aggressive entry. Would you have waited for confirmation the next day? I bet half this candle happened in the first few minutes of the trading day, So there you go. It can be a tough one to catch. So you almost want to, I don't want to say you want to pregame it, but you would need to take aggressive entries and aggressive stop outs. So if it doesn't go the direction that you're wanting, you would need to get out quick. All right, guys, we already ran a little bit over time, but I was happy to do it because we had some good stuff to talk about. I see some other tickers in there. You'll just have to hold on to those for next time. Remember, guys, we're going to start noontime Central Time, and get your tickers in quick and early because otherwise we may not be able to get to all of them. I want to leave you with one last thing. You guys will like this right here. Next week, Tuesday, we're having a paper trading webinar that Jeffrey Nance is leading. I'm going to be helping him out with that. We're going to be paper trading in charts by TRADEway. And you can sign up for this free webinar at the link that I just dropped in the comment box right there. So again, that'll be Tuesday at 11 a.m. Central. We're going to be talking all about paper trading in charts by TRADEway. So I look forward to seeing you guys there because I will be there too. And then, of course, we'll see you next week, Thursday, noontime for live trading. Come bring those tickers and we'll look at those guys. Thanks. Bye.